Okay, let's get our hands dirty. The report reconciliation allows companies to compare amounts listed on source documents to the total listed on the balance sheet. Now, this isn't something that is used for every account, but for things like accounts payable and payroll, where going through every transaction can be a headache. The report reconciliation can simplify the task. On the other hand, with accounts like a long-term note, if the balance is off, you'll likely know that it is an issue with either the principal or interest payment. By using a report reconciliation, you save yourself the time of having to go through line by line. Just fix the transaction and you're done. Now, from a reconciliation standpoint, there's some benefits to using the report reconciliation method. However, since this method is a bit more high level, if the accountant finds an issue, you may still have to dig into the books to determine what the issue is. Now, I know that was a lot to take in, so before we look at the report reconciliation process, let's get a few tips from an expert.
In some cases, reconciliations have to be done without an outside source document, meaning something like a bank statement showing the ending balance at the end of the month. A good example of that would be accounts payable. Accounts payable is a series of open bills that have not been paid. There's really no outside source document that says, okay, accounts payable issued by some outside company telling you what bills you haven't paid. Nothing to reconcile to. So that transactional reconciliation, the traditional one that we've been discussing, really doesn't come into play. So what do you need to do? You need to actually, it's called a report reconciliation. You're going to run the accounts payable report. You're going to look through those open bills with your client, and you're going to verify that they still are truly not paid. So it's more of an overview, a look through the activity for the month to make sure it's still reporting accurately. And it works the same with accounts receivable and things like that. You want to go through the report itself with the client and just verify everything's correct.